This is the fun part. So like I said, there are 4 journal entries that we're going to take a look at. The first couple of entries are made when payroll actually takes place. First journal entry is when we record the wage expense of the employer. So what we're essentially doing with this first journal entry is it's everything pertaining to what's being paid to the employee minus all their withholding. So we've got their gross payroll minus all the amounts that are being withheld from their payroll, and then the cash that's going out, which is their net payroll. So it's everything from the employee's perspective is that first journal entry. So we're not talking yet, this journal entry does not involve any taxes that are the responsibility of the employer or the company. This is only the taxes that the employee is going to be paying through withholding from their paycheck. Second journal entry, and again, this one happens at the same time as the first journal entry, at the time that the employee is paid. This one does record the employer's payroll expense. So the amount that the employer is responsible for paying. So that would be their half of the Social Security and Medicare taxes, their FUTA taxes that correspond to the amount that this particular payroll, the SUTA taxes, any other amounts that the employer is responsible for. These journal entries, as it says here, so they're always in the same format. They record both journal entries every time they issue any paycheck. So even if it's a paycheck that is outside of the normal cycle, which can happen, as we talked about, when somebody is terminated and maybe they have to be paid immediately if they live in a state where that payment has to be made. So it could still be, there's still a journal entry that's required even if it's outside of the normal pay period. But anytime an employee is paid, that triggers both of these journal entries. So let's take a look at what those look like. Somewhere here. Where are we? I lost track. Sorry. Why? Where am I? Good Lord. All right, there I am. 29. Okay, so this is where we're going to extract the information that we need for the journal entry from our payroll register. Okay, so these are the totals. All of the employees, the amounts are going to be combined for all of these employees in the journal entry. And what the journal entry is going to look like. So here's a kind of a snippet of that payroll register. We've got each, 2 employees here, and then we've got the totals along with the Social Security and Medicare tax, federal income tax that was withheld from the employee's paycheck, state income tax, insurance, and then the net paycheck. So the debit in this journal entry is going to be the gross payroll, and this is going to be our payroll expense, wages expense or salaries expense. And again, it may be done by department, right? And in this case, we're just going to give an example of the as though it's just one department here, or we only have 2 employees. So our wages expense is our debit, and that's going to be our total gross payroll. The rest of these amounts, OASDI, HI, these are payables. These are amounts that we're withholding it from the employee paycheck, right? But at some point in the future, we're going to have to then remit those amounts to the IRS or to the State Department of Revenue, to the insurance company, to different agencies. So we've got some other debits that have to happen. So we've got payroll taxes, well, and we'll do, well, let's see what the terminology that they used. I'd call it payroll taxes. Yeah, payroll taxes payable, OASDI. So they've got this divided up between OASDI and HI. And this is going to, because this is a liability account, liability accounts have a normal credit balance. This is going to be a credit. So 114.39. And remember, all of our debits are going to have to equal all of our credits here. And then we've got payroll taxes payable, HI. So our total amount of Medicare taxes, $26.75. And let's see what they named this. I just want to make sure I'm using the same titles. Okay. They're calling it employee federal income taxes payable. And this is important actually. That it says employee, because the company itself may have its own income taxes, right? If it's a corporation, they may have their own income taxes that they have to pay. So it's important to distinguish that these are the employee federal income taxes payable, so as not to mistakenly combine it with the corporate income taxes that may be payable. So our total here, 170. And then our employee state income taxes payable, 50. And then, what are they calling this as well? Group insurance. They're calling it group insurance payments withholding. I'll talk about the reason for that in a second. So, the reason that this is probably not a payable account is because the full amount has already been paid by the company. And this is essentially just the employees paying the company back for their portion of it. All right, so if we were to add all of this up, the difference ends up being our net paycheck. That's the cash that's going out. Cash is an asset account. Whenever we increase an asset account, it's a debit. But because we're paying it out, we're decreasing our cash account. So that means it's going to be a credit. So the difference here, actually got the total here, so $1292.86. This is the amount that the employees are actually receiving. Again, all of that information coming right from the payroll register. So it's right there. You can extract it to make the journal entry. If you go through and add up all of these amounts, it should total $1,845. Because your debits and your credits have to be the same. So that's journal entry number 1. That's the first one. The second journal entry comes from the other side of the register, and this is the amount, these are the amounts that the employer is responsible for. So here we've got the first journal entry, everything pertaining to what we're paying the employee and the amounts that are being withheld from their paycheck. Second journal entry, we're going to debit payroll tax expense. This is an expense account that would show up on the income statement. So this is the total amount that the employer is responsible for. Okay, so payroll tax expense, did they add up? So all of these amounts added up is the total amount of payroll tax expense. We can wait and do that part last because that's going to be then our debit to balance the journal entry. So all of our credits, food and taxes payable. $3.69. Student taxes payable. $46.06. OASDI payable. And HI payable. So again, these are the amounts. And you'll notice, so the $114.39, that's equal to the employees' amounts that are being withheld from their paycheck. And $26.75. Add all of those up, and we'll get our debit. So oops. 190.89. Again, debits equaling our credits. Here. Second journal entry. So again, all of these, both of these entries occur when the employee is paid. So you've got enough knowledge now, having gone through this class, that if I said, okay, I've got 2 employees, here are their W-4s that show how much they're going to have withheld. Here's information about any pre-tax benefits that they are participating in. Calculate their income tax, their federal income tax. Here's the state income tax rate. Calculate their state income tax withholding. Calculate their Social Security withholding. Calculate their Medicare tax withholding. Make both journal entries, the first 2 journal entries for those employees. You've got enough information that you could do that because you know how to calculate, you know how to, well, even if I gave you less information than that, if I said they worked X amount of hours, they're paid this rate, maybe they had a couple hours of overtime so that you could calculate their gross wages, and then you can calculate their withholdings, and then you can make the journal entry for all of that because you know how to do the federal income taxes, calculate the federal income taxes that should be withheld. You know how to calculate the Social Security and Medicare taxes that are to be withheld. You know which types of benefits are pre-tax, amounts that would reduce their taxable wages. And now you know the journal entries that would need to be made, right? Yeah? You remember all that stuff? It's all in there somewhere. Let's see what they're having us do. All right. So again, these are our, I don't know if I want to do that. First 2 journal entries. We're going to extract the information from the payroll register. First journal entry is all the information from the employee's perspective, from their side, what they're being paid, what's being withheld from their paychecks, and their net pay. And then the second journal entry, the amounts that the employer is responsible for, all of those taxes that the employer is responsible for the employee. Questions right now? Yes, no, blank stares, crickets. Crickets. I know, you guys are all accountants, you're introverts. I get it. All right. So, well, they don't have the, hold on just a second. I gotta get the payments. What's that? Oh. All right. So what happens when we make a journal entry? Like I said, it gets posted to the, where are we here? I just want to go back to right to the beginning here so we can kind of remind. So this is the first step here. Journalizing the payroll and withholdings, creating that journal entry. It gets transferred over to the general journal, so all of the entries are then recorded in the general journal. So this is what they would look like in the general journal. It's by date, but I had also talked about posting to the general ledger. So once we make these journal entries, let me go back to those journal entries. What happens is for each of these accounts, we're going to post to that general ledger. So each of these accounts is going to have their own account listing in the general ledger. So our wages expense, and let's do that. We've got these up here. So we've got a wage expense. And each of these has two sides. We've got debits and we've got credits. So we have a debit to the wage expense. That gets transferred over $18.45. All right. FICA taxes payable has its own. And this is OASDI. These are called T accounts, obviously, for obvious reasons. So 114.39, but this is a credit, so it's going to be on the right-hand side. And then we have a FICA taxes payable, HI, 2675. We've got employee federal income taxes payable. Withholding. And then we have cash. Cash went out of $1292.86. So all of those entries then get transferred over to their separate ledger accounts. Same thing happens with the next journal entry, and of course for every journal entry that is made in the accounting system. All right, so we got a couple of new accounts here. So payroll tax expense. Has its own 190.89. FUTA taxes payable. We already have an account set up for that, so we can transfer. Oh no, we don't have FUTA. Sorry, I was thinking of the OASDI. So FUTA taxes payable and SUTA taxes payable. $369 and SUTA payable. $4606. Now we've got the FICA taxes payable. We add that to this total here, so 114. We've got a second entry that goes in there and a second entry for the Medicare taxes. So this is what the accounts look like, and it's just a running total until such time as we pay the payables. That's our third journal entry. When we're actually gonna make the payment for the taxes. All right. I don't know why they throw that in the middle there. So, the general ledger account balances currently, adding these two up, we're at $228.78. 53.50. Federal income taxes payable is at $170. If we had multiple pay periods before we make this payment, then this is going to we're going to total up everything that is in this credit column. State income taxes payable, FUTA taxes, and SUTA taxes payable. So we know exactly how much is going to need to be paid all of these payable accounts. So when we actually make the payment, now we've got the information for our third journal entry, which is at the time that that payment is made. So we're going to do this here. Sorry, I know this is kind of low for some of you, but if we're making this payment, so our we're going to have cash going out. We don't know how much cash yet until we total everything up. But we've got our OASDI payable. And this time we're going to debit it, which is going to bring our balance to zero in this account. So $228.78. And our Medicare tax payable is again going to be debited $53.50. So that brings us to zero in that account. And then we've got our SUTA. Well, in this case, this is just the federal taxes that they're paying. There'd be a separate entry for the SUTA since that's going to a separate payee. So we'll do, actually they don't even have the FUTA taxes here. They just have the employee federal income taxes payable. About 170. So again, there'd be then a credit. So now our balance would be zero in that account. We're not paying our FUTA. I guess we're assuming that we don't, $3.69, we haven't reached that $500 threshold, so we don't have to pay it yet. If this is like the first pay of the year, if it were the last pay of the year and we had reached that $500 threshold, or at whatever point during the year we've reached that $500 threshold, then we would be making this payment, at least at the end of the quarter. This payment here is gonna be made according to our schedule, and that depends on if we're a semi-weekly scheduled depositor, or a monthly scheduled depositor, or a next day scheduled depositor. We're not next day with this amount, obviously, because it's not enough to. And then the cash is our balance, $452.28. So this is the third journal entry that we would make at the time that we are actually making the payment. This consists of amounts that the employee has had withheld from paychecks, as well as amounts that the employer owes. Right, so both of those amounts. Now this is only for our state income taxes, are probably going to be paid again at some other point in the future. Where's our state income taxes? So the $50 That's gonna get paid at some point in the future to a different payee. Here, we're just recording the amount when we pay it to the federal government. I think the next journal entry is here. All right, so when we make the state income tax payment, according to whatever schedule that we need to make that payment on, again, we're going to debit then state income taxes payable and credit cash. Cash is going out for that $50. That'll bring our state income taxes payable balance to zero. Cash, oops, so cash would be $452.28. And then our SUTA taxes, oh, and $50, sorry. And then our SUTA taxes, when we make that payment, $46.06. So now we've got a zero balance there. That means we don't owe it because we have just paid it, and we've got more cash going out of $46.06. So this shows you, hopefully we had cash in there to begin with, because otherwise we've got a big negative balance. Those are all cash payments that have been made based on this particular payroll. They have in this one. And then the FUTA. So as I mentioned here, FUTA deposits are required when the amount is $500 or more, or at the end of the year. So we wouldn't make that payment until it's actually due. But when we do, $369 again. So now we're at zero here, and $369. Hopefully at some point along the way we've had some debits into that cash account. That's the third, these are all part of the third journal entry, when those payroll taxes are actually paid. Okay? Again, at whatever point in the future that we need to make them, depending upon our payment schedule. Questions about the third journal entry? I mean, it can be a series of entries, but it's still part of the third type of journal entry that we make. All right. Let's see if there's anything here we want to do. Can get a bit messy. There is I think in your chapter 6, and I know most of you don't have the paper copy of this, but there is there's an illustrative case in here. Let's actually I'm going to take a look at that so we can look at that together. Let me pull it up. Oh, shoot. So in this illustrative case that you have in your textbook, they have some beginning balances that we would start with. So you can tell from this, so they've got $85,000 cash in their account. They have FICA taxes right now that are payable, so they owe FICA taxes. $961. Oops, sorry, the OASDI taxes. Medicare taxes that they owe are $224.75. They owe food taxes of $91.50, which means depending upon whether they've hit that $500 threshold, this really isn't enough information to determine whether they have or not. They may or may not have to pay that. SUTA taxes payable. Employee federal income taxes payable, so they've withheld from employee paychecks. They've not made that payment yet for $14.72. State income taxes, same thing. They've also withheld $80 from employee paychecks for union dues. The gross salaries are $46,500. Now that's not a payable, that's how much they've paid in wages this year. And then payroll taxes, they've incurred $4,224 in payroll tax expense. Now it doesn't say expense on here. I like using the word expense when it's an actual expense, but your book will just call this payroll taxes, so just kind of be careful of that. All this information, you already know this stuff, what the OASDI wage base is and what the tax rates are, what the FUTA wage base is and the tax rate and all of that. They've given us a SUTA tax rate of 2.3%, again, based on the first 7,000 in earnings. Wage bracket methods are used. Let's see. I can make this any bigger. Kind of hard to see, but okay. So on January 1st, so these are our beginning balances here. January 1st, we paid the union $80 because we owed $80. I know this is might be kind of hard to see, but so again, that's a payable. This is a payment that's going out. So our cash is going to be a credit because that's money going out. If it was money coming in, it would be a debit. It's money going out, so it's a credit. We paid that $80 that was owed up here that we're showing as a payable right here. So that's paid off. So the result of that is now we owe nothing in union dues because we made the payment. January 14th. So, and it says that was for the earnings, or the amount that was withheld from paychecks in December is now being paid in January. January 14th, pay total wages and salaries of all employees of $3,890. That's their gross amount of pay, so that's going to be our debit, the $3,890. All the earnings are taxable under FICA. In addition to Social Security taxes, company withheld $455 for federal income taxes, $85.58 for state income taxes, $45 for union dues as well. So here's the rest of we would have to calculate, so $3,890 times 6.2% for our income taxes, $3,890. So $241.18 should be the amount of FICA taxes that are payable, $56.41 for the Medicare taxes payable, and then they gave us the amounts for federal income taxes and state income taxes and the union dues. So the total amount of cash that goes out, $3,683. You can find that number if you don't already have it. You can find it by taking the $3,890 and subtracting all of these amounts. This is going to be the difference. Okay? And then the explanation of what the journal entry is for, to record payment of wages and liabilities. Then we've got that second journal entry that has to happen. So the first one, of course, pertains to all of the employee. I can make that any bigger. I guess that's a little bit bigger. The amounts that the employee is responsible for. The second journal entry here are the amounts that the employer is responsible for. FICA taxes payable, again, it's going to be the $241.18. Medicare taxes, the OASDI taxes. Medicare taxes, $56.41. Food taxes, we would calculate that based on the 0.6% of those gross wages. They told us that all of them are subject to food tax. So 2334 SUTA taxes. Again, they gave us the tax rate there that we would apply. This is to record the payroll taxes and the liabilities that are due. On January 18th, now down here, they should have the T accounts down here somewhere. I thought they did. I'm not going to go through all of these, don't worry. So here is our general ledger showing all of those transactions, and you can see, so here's our cash account. When we made that payment of the $80 for the union dues, that was recorded as a credit. So that subtracted from our debit balance of $85,000, because that was our beginning balance, brought us down to $84,920. This journal entry on the 14th, this is the amount of net wages that are paid. The entry on the 18th, I haven't gone through that yet, but that's the actual payment of the payroll taxes that had been withheld, as well as the amount that the employer owes. And then on the 18th as well. So each account, so here's our cash account, FICA taxes payable as well. So the recording of each of those. So here would be the employee's portion and the employer's portion. Remember, we had a beginning balance of $961, so we hadn't made that payment yet, because that was for December. If we're on a monthly payment, if we have to make a monthly payment, that's going to be paid. Well, here it's on the 18th, probably because the 15th was a holiday or on a weekend. FICA taxes payable again. So these are our T accounts that I have up here. SUTA taxes, each account has one. So each of these entries that is being made up here, the journal entries, is then being transferred over to the general ledger. So the January 18th, they electronically transferred the FICA taxes. All of those payments are being made. So FICA taxes payable, $961, that's the amount that was due. That's not the amount that we just withheld, because that's not due until next month. That was the amount that was withheld in December. So this balance right up here is what's being paid. Same thing for the FICA taxes payable, the Medicare taxes, and the federal income taxes. That's all coming from our beginning balances here that were carried over from last month. And then the cash going out. Let's see if there's anything else I want to say. Like I said, I'm not going to go through each of these transactions, obviously. This is, so it's just, it continuously, it's a continuation of all of those journal entries. And then we have, let's see, on the 31st, we've got a couple of other journal entries, adjusting journal entries, and that's what we're going to talk about next. So up to, let's see. So this journal entry is another payroll that occurred. Maybe they don't have adjusting entries in here. Okay, this example may not have some adjusting entries, but that's what we're going to talk about next, are the adjusting entries that are made. All right. So just, that's in there. You can follow along with it. Take a look at it. When you're doing your homework, it could be helpful to reference this example as well if you kind of forget what those journal entries look like. Okay. All right, so let's talk about the fourth journal entry. Okay, so the fourth type of journal entry is the end of period adjustment. This occurs because there's some type of timing difference between the accounting period and the payroll period. Okay, so it's to account for that timing difference. So, for example, if I pull up the calendar here, October would probably be a good example. If we had a payroll period that is, say we're on a bi-weekly pay period, and our pay period extended, maybe ended on the 3rd, started, we'll say it started on the 19th of October, and then ended on the 3rd, so 2 weeks. But you can see here that our pay period overlaps our accounting period and a new accounting period beginning. So we need to account for our accounting period, we have to account for the wages that have been earned so far, but they haven't been paid yet, right? So that's where these end of period adjustments come in. So entry for wages earned in one period but paid in another period. So here, what you do is you record it as a payable. You have to calculate what that wage expense is and debit it, and then create a payable for the amount that's due. So for example, in October, if we had, let's say that we had wages, it's a 5-day work week, and we had wages that accrued of $1,000 a day that we pay employees. Well, that means at the end of October, we have $9,000 of wages that have been accrued that we have not paid yet. They're not going to be paid maybe until like the following Friday. So we've got to accrue those wages to account for the expense in the correct accounting period. So we make a debit to wage expense, and then we have a payable, we have an amount that's going to be due of that $9,000. Now in the next pay period, we have the additional, the $1,000 for the first, but that's going to be in the correct pay period. So we make that, so we accrue that expense in the correct period here with this last journal entry. And then when we've already got the expense listed there, the next pay period, when we actually make that, we're going to pay those payables, and we're going to make a debit to the payable account of $2,400, and then a credit, and then we're going to have additional wage expense for the wages that are accrued in this period, and then we'll have cash going out, and that will be our credit. Vacation entries, some employers do this, some employers don't do this, kind of depends on larger employers would probably do it, they may be required to do it if they have an audit. For vacation earned but has not been taken yet in the future, again, this is going to be a payable amount. So we're going to accrue the expense, or we're gonna record the expense of $1,000, which is a debit, and then the vacation benefits payable will be our credit entry. When it's actually taken, we will then debit the vacation benefits payable and then credit to cash. Okay. And as they mentioned here, so post-retirement benefits like healthcare, pensions will also require adjusting entries. Again, mostly for larger employers. Smaller employers, maybe not so much. A lot of smaller employers, they don't really have, well, I suppose if they owe an amount, if they're making a contribution to those retirement plans, or if it's a traditional pension. All right. Any question about those journal entries? We've got the 4 journal entries. First 2, then at the time of the payment of payment to the employees. Third one is when we actually make the payment of the payroll taxes or any amounts that have been withheld. And then the fourth one is our end of period adjustments. All right, no questions. So, that said, so those are all listed as well in the agenda for today. What the debits are, what the credits are. Well, all right. Any questions about the homework?